Well, last week, the Bank of Canada did not raise the overnight lending rate as I hoped they would have. And unfortunately, I think this is giving people false hope of what's going to be coming in the future. So I wanted to address that here today, not in a regular style video, which I normally do here on the channel, but this is just going to be an open-ended rant. So hopefully I can give you a little bit of perspective for whenever you decide to make your next purchase or refinance your mortgage. Remember, this is not advice, it's just perspective and something to think about as you move forward. But if you do like these less edited and much more rant style videos, please go ahead and make sure you click the like button to help get videos like this one that I do out to more people. And if you're new to the channel, my name is Steve Karrasch. I sell real estate here in Surrey and the Fraser Valley of British Columbia. So please go ahead and subscribe if you would like to stay up to date on the market. Okay, so the gist of it is the Bank of Canada got numbers in on job vacancies dropping and also the economy shrinking within about a week of making this announcement. So personally, I think that's what triggered them to not raise rates this time around because things are starting to go in the right direction. But everything previous to that led towards, hey, we need another hike to get this inflation under control, finally tamp it down and get back to normal. But I do think this is a little bit of false hope because what a lot of people are missing is the fact that Tiff Macklem and the Bank of Canada basically said that, hey, even though we're not going to raise right now, we are likely going to now have to raise in October. So here is everybody celebrating that, hey, this could be the top and they're stopping again, or at least they're pausing for a while. And I just don't believe that's going to be the case. And the issue I think this brings up is right now, a lot of people are betting on 3-year fixed rate mortgages in order to get them through this period of uncertainty, hoping that we come out at lower interest rates on the other side. So the bond market is pushing people to think that rates will be lower in 5 years. So the 5-year fixed rate is actually lower than the 3-year. And that might cause people to now gamble on, again, variable rate mortgages or 3-year fixed rate instead of taking a 5. Now, I've always been a 5-year fixed rate guy. Every mortgage I've ever taken has had at least a 5-year fixed rate component to it because I prefer security and I'm not here to gamble with where my payments or where my amortization will be in the future. So a lot of people are betting on 3-year mortgages right now that are as low as maybe 5.89% and as high as over 6.3% in many of the major banks, when they could secure a 5-year fixed rate right now for as little as 5.59%, and I've heard some credit unions are lower because they hope they can make up the difference at the end of the 3-year term on their new rate, which would then have to be down into the 4s or maybe even lower to make up the difference. Also, this announcement seems to have, again, pushed more people towards the, well, rates are going to cut sooner side of the argument, which means that those people are going to be looking at variable rate mortgages, which by all estimations right now kind of sit in the 6.3 or maybe slightly higher range. So the way my fixed brain mindset works is now I look at, say, the 5.59 and the, let's call it 6.3 variable rate. Well, how long or how fast do I need those mortgage rates to come down to make up for the difference? And that's why, personally, I always lock in to the 5-year rate. It just gives me security and I'm not gambling for at least the next 5 years. Now, everybody has the hopes that rates are going to come down quicker, so that's why they're going with these shorter products, and the banks kind of understand that, so we're seeing these higher rates, of which I think could be a little bit of a trap in the lower term or variable rate mortgages. Now, that's not exactly how those rates are set, but I do think the zeitgeist out there of everybody thinking that things are going to get better in a year or two, well, that's causing the markets to price these products that way. And again, right now, my personal mortgage broker is helping people by looking at not only big banks and getting approvals there, but right at this moment, a lot of the credit unions here in BC have a lot of extra money on the books and they are looking to lend at lower rates. But Bentel has now famously said that no matter what, the bank is going to overshoot on interest rates rather than undershoot. Overshooting, sure, can be fixed and remedied very quickly by lowering rates. Again, it will cause unemployment and other factors that are not good for everyone, but it will tamp down on inflation, which is the worst thing for the general economy and the public. So he was kind of happy that they did not raise this time. He does expect them as well to raise in October, and this was actually his prediction he made prior to the announcement just last week. But at the same time, he then expects that the bank will have caused enough pain to start reducing rates, or the overnight rate at least, by about halfway through 2024. And again, only if inflation comes down and things get really bad for things like employment will those rates start getting cut to then again stimulate the economy. Things have to get bad before they can get good again. And now Ben is probably the most well-known and well-respected economist in the entire country. While he expects the overnight lending rate by the end of 2025 will have to be at 2.75 to 3%. So ideally, I would have liked to seen them overshoot earlier so they can start cutting faster. Because as well, let's go back to Ben Tao on this one. He feels that if we don't get rates down by the middle to end of 2025, well, between 2025 and 2026, that is when 50% of fixed rates roll over in Canada. With inflation and the spending money that's being ripped out of your pocket by paying extra taxes and more for goods, well, there's not going to be enough left over for a lot of those people to now roll into new mortgage amounts. Maybe they're down at 1.5% right now, but they were stress tested. It's okay. They were stress tested at 4.75 to 5.25%. But if we don't get those 5-year fixed rates down below that 5.25% by then, well, that's when you could really see pain within the Canadian housing market. So that's my perspective and my rant on the current situation with interest rates. Let me know what you think down below in the comments. And if you need help right now with your mortgage, you can go ahead and fill out an application with Citywide Mortgage Services down below using the link in the description. Of course, if you need help navigating your real estate transaction here in my market of Surrey or the Fraser Valley, you can book a call with me right now using the link also down below in the description. Thanks for subscribing, clicking the like button for rant videos like this one. We'll see you in a couple of days.